Right. Hello, everyone, and welcome to this interactive session. I'm delighted to be joined by Andrew Rabbitt and Jonathan Boon. As I'm a last-minute stand-in due to technical difficulties, which isn't unusual in this new virtual world, I'm just going to quickly pass over to Andrew and Jonathan to introduce the session and get us started. Thanks, guys.
Excellent. So my name is Jonathan Boon. I work at a company called ClearBank, who are powering this session. My role at ClearBank is I'm the lead for the mutuals relationships, so building societies and credit unions. And we've been working with Andrew and the team at Incuto for some time now to provide a solution to community banks. And we really experienced it over the past 6-9 months, especially with the pandemic, on the benefits of providing new technology to some of the audit institutions. Hopefully we can share some information today about the work we've been doing together and how we can help going forwards.
Thank you, Jonathan. And now over to you, Andrew.
Okay, so I'm Andrew Rabbitt. I'm the CEO of Incuto. Incuto was founded back in 2016 on the premise that community banks that we were working with were essentially underwhelmed by prevalence of good technology. So we wanted to address that issue, and we recognized that people didn't have huge amounts of budget or confidence in technology. So we wanted to bring a solution to that in the form of a software as a service platform, which was essentially free to enter, no license fees or support fees, and aggregated volumes across lots of different partners to try and ultimately reduce the cost of lending for the banks that we're working with, and to do everything on the basis of a transactional cost. So we've been working with ClearBank for over a year, bringing this solution, and a key part of that solution being payments, faster payments and direct debits to this marketplace.
Thank you for that, Andrew. And perhaps I can direct the first question to you. Clearly, 2020 has brought tremendous challenges. I don't think I need to outline them. We're all aware of them. But with difficulties like branches closing, people being furloughed or made redundant, what are some of the biggest impacts you've seen in the community? And how has financial inclusivity been tested even more during these times?
That's a really good question. I think there are two bits to that, really. One is a really obvious one around accessibility and cash, actually. So one really big challenge is the fact that I noticed 4 months into lockdown that our high street banks in our local town were open 10 till 2, and it was the only time I'd ever noticed it. And it turns out that's pretty prevalent across the country. And nobody really cares, right? Because you just log into your app on your phone and do it a different way. And community banks have had this expectation that they're going to continue to be there and open and present. And an awful lot of the community banks that we're working with, credit unions and community banks, are often led by volunteer teams. Some of those teams are vulnerable in their own right. And so, really just keeping the doors open has been a kind of huge challenge to this. And the second impact, actually less tangibly, is a load of payday lenders and Bright House went out of business during the pandemic. And so you've got this whole group of people who, and I mean like a huge number of people, into the sort of 3 or 4 million people who were regularly accessing those kind of financial services, who now need somewhere to go. And at a point where that would be a huge stress on any system at any time, introducing that challenge on top of being able to deal with your existing customer base is a huge new and exciting challenge, I think. Without a pandemic, that would have been really interesting. But with a pandemic, that becomes way more intense because those people need that service more than ever.
Yeah, absolutely. I think I definitely what you're saying, I imagine, will resonate with a lot of the building societies and credit unions in our audience today. And just to let anyone know who's watching, if you want to comment on anything that Andrew and Jonathan have to say or ask any questions, please post them in the chat and I'll put them to our speakers. Next, I have a question I'd like to address to the both of you. when it comes to financial inclusion or financial inclusivity, the idea of a community bank is a powerful one, which resonates with a lot of people. Even before COVID, we saw many high street bank branch closures over a number of years. How do you think that community banks and credit unions are playing that role, as community banks, and the ways in which they're already and perhaps commenting on the ways in which they're already well suited to help those that have struggled accessing financial services during the pandemic, and as you mentioned, Andrew, with restricted services in many places? Perhaps we can start with you, Jonathan.
Yeah, absolutely. So for me, the benefit that building societies and community banks really have is the trust factor. They're there for members. They're not there to, line shareholders' pockets. They are there to act for the members. And so that acting in line with the community spirit, the mutual nature, and I think there's still a lot of mistrust from people in the larger banks. Since the 2008 crisis, it still continues now. And as Andrew was mentioning, the payday lenders, we know the reputation that they've ended up receiving over the last 4 or 5 years in particular. So being well placed, people knowing that they're there to support the customers of the building societies themselves is so powerful. It isn't something you can manufacture overnight. As good as the new startup banks are, and many others use them, I personally use the startup banks as well, they can't manufacture that trust element that the building societies, credit unions, and community banks already have. So in a time of such stress as a pandemic, knowing that you're going to go to a building society if you need to request a mortgage holiday or request some type of financial assistance, knowing that they will do whatever they possibly can to help you is extremely powerful for the customer satisfaction and knowing that you have their support when you're struggling in your own life.
Yeah, I think those are some great points around trust and how hard it is to build up and maintain, particularly in a time of crisis, and how an institution responds will either continue to build that trust or perhaps damage it. Andrew, can we pass over to you now for your thoughts?
Yeah, one of the things that kind of emotionally drew us closer to this sector was this idea that actually everybody's in this to try and help people, and everybody's in this to try and drive a model where it possibly can will say yes, and they'll work really hard to try and deliver a product or deliver a service, no matter how difficult that is under the surface to actually do. And traditional banks have obviously got a very fixed model which says no a lot and sort of drives people out of the queue. And credit unions and community banks seem to go over the top to try and make it work. And what we've been trying to do is to automate some of. Great example is a lot of credit unions receive people's universal credit payments, so they are by default taking a role in a kind of position in society to help people who might not be able to access a bank account from anywhere else. And I know that you can go into a high street bank and technically get a basic bank account, but if you've ever actually tried to do that, you'll know how difficult that is. And in reality, these guys are then working really hard to help people pay their bills, to support them in the choices that they're making, and do all sorts of other things. They pay their rent, they pay their TV license, they pay their water bills to keep them on track, and really overlay like a human level of financial education into the process. And so one of the things that they're particularly well suited to is an ethos to want to do that. And I think the thing that this has highlighted and COVID-19 specifically has highlighted is that there's just an awful lot more people who will gravitate towards that model, but it's not a model that can scale if it's just being driven by lots of people sat in offices trying to do the right thing. I'm not sure if that answered the question, but.
No, I think that's a great point. I mean, obviously, as you both pointed out, there are institutions that know their community and understand the financial stresses and how the kind of overarching changes in the economy might be impacting them. So no, I think that's some great points. But picking up on some of what you said about people sitting in their offices, maybe you both can speak a little bit to how technology and the leveraging technology can help financial services institutions generally, but community banks in particular, at improving or driving greater in financial inclusion? Perhaps we can start with you again, Jonathan, this time.
Yeah, absolutely. So for me, the tech developments benefiting, everyone in society with being able to access financial services comes to two main points. First of all, it is the speed and processes you can achieve and the benefit in moving to real time. At ClearBank, we see real time being essential, and everything we've built has been to transfer all information we can in real time. And as long as the clearing schemes can support real time payments as well, that's what they're doing. That's what we've worked with incuto to launch faster payments earlier this year. By building up that speed, by leveraging the use of APIs, which are essential in doing so, you can create effectively an ecosystem. So you bring in the best providers. So as a community bank, you're not going to be beholden to one provider that can do sort of a bit of everything, but not very well. You can pick and choose the best providers to support that activity. So by doing that, you're going to reduce your manual processes. You're going to increase the efficiency of doing those processes and remove the costs associated. So overall, what that means is a lower cost in providing a loan or a mortgage to someone can mean a better overall service to that person, more favourable rates. As Andrew said, credit unions in particular look to replace what the payday lenders have been doing. We know the biggest issue of payday lenders are the high interest rates. If you can get an emergency loan with a more reasonable interest rate to support the few £100 you need to fix your car to be able to get to work the next day, that's going to be really powerful. So bringing that in. And then the second piece outside of speed is about how wide, how the services become wider available. So you don't need to be just in driving distance to a branch to be able to go and complete a mortgage application, for example, a building society. Being able to do that online, being able to manage your account fully online. Pretty much everyone has a phone and uses financial services on the phone. So having apps that work effectively on those devices, being able to send and receive payments, manage your accounts, manage your finances appropriately is key to the financial inclusivity. And what I think we need to do is the next step. So what, like I said, we've really done that fast payment so far, and we are supporting chaps and backs as well. And the next levels we see are being things like being able to support checks completely remotely, being able to offer cards for people. And then what that ultimately means is a fully operational current account that building societies can offer. There's only 3 building societies in the UK at the moment that can offer current accounts. So being able to do that in a cost-effective way by using the best services, using APIs, taking away some of the operational burdens that it would have had in the past by using the best providers, all connected together through APIs, is going to be key to bringing more suitable current account products to building society customers.
I think those are some fantastic and concrete examples of the way that technology can improve the delivery of services, the speed of services, the range of services for community-based institutions. Andrew, is there anything that you would add to what Jonathan said?
Yeah, I think there's a couple of other bits in there, because all of that is absolutely right. I mean, this is about kind of delivering that core set of services, and these services are not new, right? I mean, the key thing that we've got to remember here is that they're new to this sector. They're not new to the world, and this could either be a game of trying to play catch up with the high street banks or completely leapfrogging them. And what we've got to remember is that the high street banks are kind of running everything based on sort of old tech themselves, and their rate of pace of change is much slower than we can be. And this is about monopolizing that. And one of the really big opportunities is about shifting the game of how people actually access these services in the first place. Because one of the most exciting bits about credit unions, community banks, and building societies is the idea that you become a member of it, that you are, you're part of something bigger. But actually becoming a member can actually in its own right become the barrier. Because if you go to a payday lender, you're borrowing money. That's it, right? Their primary focus is to get you through a loan application process as quickly as possible and get the money in your account. Whereas a credit union and a community bank or a building society kind of has this step at the beginning where they kind of have to sell you on the idea of becoming a member first. So we've spent an awful lot of time flipping that model on its head and going, let's let you apply for the loan and sell you on the virtue of becoming a member later. And let's get that onboarding process really slick. Let's do it in as electronic, automated possible as way as possible. So we get you through electronic ID and V, or the credit scoring, give you alternative ways of verifying documents, fraud monitoring, all that kind of stuff that's done in the application journey, rather than it becoming a kind of secondary step which adds delay in. So from a customer experience, before they become a member, they get the product that they wanted. It's a bit like going into Tesco and not being able to buy a loaf of bread before you got a club card, right? It doesn't make sense. So it's sell you the product you came here for and tell you the good news story at the end that you're now a member of something awesome. And so we spent an awful lot of time using tech to flip that model on its head and make it really slick. I think the only other point on there around that Jonathan mentioned was around that cost of lending. So one of the things that we focused an awful lot of attention on is how do you bring down the cost of being able to deliver the emergency loan at to a customer. So we've got a maximum charge in our platform of £6. That's the most you can ever pay to lend money to a customer. And the reason why that's there and why it's so significant is that a credit union is capped in its rates, and it can return on a typical payday loan of, sorry for all the numbers, but £260 over 3 months. It's a typical payday loan. It can return a maximum of £18.19. But if it costs more than that to lend the money, it's not a sustainable product. It's only a goodwill gesture, and therefore it can never become an embedded part of the service. So by taking that model and trying to drive down those costs and get it to the least possible cost, and also driving down the cost of a decline, how quickly can we take someone out of the process without actually costing you any money at all to make sure that people are not inappropriately applying for products they're never going to get. So I think that's really where technology is something that we've been able to kind of use for good in that process.
Yeah, again, those are some great examples, particularly considering the outer bounds, the limits of what a credit union, for example, could charge on that type of short-term lending. Then the cost of being able to bring down the cost of that is absolutely crucial. And then just referring to something that you said, Jonathan, when you were talking about accessing, being able to access financial services digitally for their members, we often think of that as something that is to bring in the next, the younger demographic of consumer. But one thing this crisis has taught us is that in a situation like COVID, there are some people who literally are too vulnerable to come into the branch. So being able to access those services digitally is crucially important.
Yeah, absolutely. And to that point, having a direct debit failure and needing staff to go into the office to resubmit the direct debits is also something that had to happen during lockdown, but really shouldn't be doing going forward. So that's something we've been working on over the past several weeks with Andrew, funny enough, to resolve, so that if that happens again, they don't need to go in the office. So both for the customers and staff running the building societies, credit unions, having those remote support services, as well as the actual payment services, they're essential.
Yeah, someone made the interesting point earlier from one of the building societies that digital wasn't just about customers, but it was also about colleagues, which I thought was a fantastic point. So another question to both of you. How can other companies like ClearBank and Incuto support building societies and other community-based institutions so they can provide the best possible services to their members, both during the current crisis, but obviously looking at the longer term as well? And I think both of you started to touch on some of that, but maybe we can start with you this time, Andrew.
We set out on this journey with one principle that had to stick and will remain forever, which is that we were going to align with the sector. We were going to be fair and ethical in everything that we did, and make sure that when we deliver a service, it's because it's a service that benefits both the end member of these organizations and also the organization itself. And our pricing, everything else is entirely aligned to all the successful things that happen. So to become kind of embedded in that process. And one of the key relationships here between Incuto and ClearBank is that they've equally aligned to that principle that we're seen as a point of aggregation of volume. We don't go and ask each individual organization how many they're going to do and set pricing accordingly. So we can bring all of the economies of scale and all of that aggregation, all the goodness, but do it in a really non-aggressive way. So unlike most aggregators, we're actually set in the middle, a bit like Airbnb, where we're talking about a group of people who want a kind of a very good, solid, reliable, standardized process, but it's completely tailored to them, and they can't really. There's too many moving parts to try and negotiate every relationship. But by bringing the cost of each of those down, actually we can deliver each of those parts cheaper than anyone could get directly, and actually deliver some parts like this that actually you couldn't get directly because it's just not scalable enough to do it. And so one of the key opportunities of this is to do that ethically, do it in an aligned way that just doesn't take an aggressive stance with the market and go, we could fleece you for this, but to actually do it in such an ethical way that nobody wants you gone. And we work really hard to build that. It's the most painful way to build any business, but it's really, really important to us that we that we align to that, and that will be a principle that will stick with us forever.
Yeah, and I think marrying that purpose, which is obviously characteristic of many of the institutions joining us today, with the technology sounds like it's the secret to delivering the best possible outcomes to this particular group of institutions.
Yeah.
Anything you would add to that, Jonathan? And particularly, I think, referencing maybe, including some of the smaller institutions with us today, as you said, Andrew, this makes this very accessible to them.
Yeah, for me, the accessibility and working with a partner like Incuto has been key to driving that. This is probably sort of some rough language to use, but we see Incuto as almost like a hub and spoke model. So they're really the hub. They bring in the partners that work well for them. So ClearBank being the one for the payments and accounts, which we're very happy to have been a part of when we spoke the last year. But from the ClearBank side itself, it really comes down to being able to provide the real-time services. If you've got a savings account at a building society and lockdown happened, and you'd been furloughed, but you needed money to repair something in your house, or you needed money to buy a new fridge, whatever it might be, if you then went to withdraw money from your savings account and it took 3 to 5 days to hit your accounts, what are you going to do in that time? Having those few £100 go out instead as a real-time payment hitting your account a few seconds later, meaning you can get next day delivery on whatever it is you might need to, buy to keep your family happy for the next 24, 48 hours whilst you're in this stress scenario. That's key for us. So being able to deliver that in real time. So working with Incuto and other institutions that we're partnering with for other solutions is absolutely essential, and bringing in the best partners to do those jobs. And ultimately the connections come through the APIs, as I mentioned before. By doing that, you can connect with a number of partners throughout the chain and not have manual processes throughout, not have hours or days delay. Everything can be accessed within seconds or minutes, and that provides people the service that they ultimately want. And is what's also going to help building societies and credit unions and community banks come up to speed and be able to challenge the high street banks and the new challenges out there as well. Because if they're not moving towards a more real-time model, they're unfortunately going to be left behind. And I think that's what we've seen in the last few years with the aging memberships. Getting those solutions to become more real-time should bring in younger customers. If you get most people get their first account with a building society. I was exactly the same. But ultimately, when you get to the age of 17, 18, you need a proper current account because you've started getting a job, you need to get paid and access to cash with a debit card. You end up going to one of the big four, at least. That's what I did. So if those institutions can then offer a current account to receive that money, and you've got this branded card with your hometown, your home county on, it's a bit of pride for people as well. And I think that would be something that's quite powerful to do. So that's on the journey we're on. But it really very much starts with real-time information, real-time payments capabilities.
Yeah, I can see you nodding, Andrew. Is there anything that you would pick up on in what Jonathan said? I mean, it's fascinating thinking about, the opportunity that building societies and credit unions as you said, Jonathan, have to build on that trust and being, you know, one of the earliest touch points of young consumers when they set up that first account.
Yeah, and you know, this feeds back into another massive piece of the picture here, which is around financial education. So children have learned their financial behaviors by the age of 8, right? Which is a ridiculous statistic and probably made up by somebody, but it's almost certainly true. And we've been working on a project with Church of England called Lifesavers, which is all around connecting children in primary schools to credit unions, and the children run the bank, all that kind of stuff. And there's this whole kind of relationship with money and relationship with institutions that is formed at a very early age, depending on how people behave and certainly how your parents behave and their attitudes to it. And I think part of the problem with this is that it changes so rapidly that it becomes almost disconnected now between what you've learned when you're young to where you are right now. And one of the opportunities here is to start to build the blocks between somebody who's coming in from financially excluded, which is a huge range of people, by the way. Everybody thinks of financially excluded as being people at the very, very lowest end of the spectrum, people who have absolutely nothing. And actually, that's not true. I run a business and I'm financially excluded. If I went to try and open a bank account, they'd probably say no right now because of factors on a credit file somewhere that are way outside of my control. And so that there's a disconnect and a mistrust with institutions around what they're going to do with that information, how they're going to make those decisions. And I think one of the really big things here is about establishing that trust and that relationship between the customer and the relationship with the money that you've got. And Jonathan's point around real time, it's a really interesting challenge, right? That when we talk about real time payments, if you do a demo to someone of a faster payment, people kind of go, okay, it's a faster payment. What's your point? But if you talk about the idea that someone has a roll number or a member number, and if you want to pay money into someone's account, you use that as the reference, and then it pushes through, and then tomorrow someone might open a bank statement and post it. I mean, that kind of stuff is so alien that it just becomes disconnected in people's minds. And so what we're creating is a 2-tier system where you only go to a community bank if you absolutely need one, because the mainstream banks will do it faster. So what we're trying to do is kind of connect those dots and go, well, that shouldn't be the case, right? So why shouldn't you have a bank account and sort code? Even if internally you've got a roll number or a member number, why shouldn't you have a bank account and sort code you could give to someone? And when the money lands, why shouldn't it reflect in your account right now? But then we're taking it further and we're going, well, the banks, if your money lands in your bank account, it pays a bill. If a bill's due, it goes into an overdraft if there's an overdraft. And we've created a much more granular level of connectivity with the money, where we've got the identification of the source of the money. So we can make it possible to say, if your universal credit arrives, pay my rent. But if it doesn't, send the landlord a note to say, universal credit hasn't arrived yet. Your money will be on its way shortly. So to actually start to drive people's money in the way that they would if they were physically in control of it. And actually that trust dynamic doesn't exist with a bank, but also that control doesn't exist with a bank. And so the opportunity to leapfrog where people are and to drive people into this sector with just better services, just much, much better, that are designed around the needs of people who are financially excluded, but actually are just nicer things to have, even if you're not. And then you create a much more balanced model. And the aim ultimately is to get more and more people seeing that community banking model. You know, you look at the high street and go, hey, they were the ones that stayed open when the high street bank closed at 2. Right. And that's the key aim here.
And I think
I have to say, Andrew, some of the examples you just gave really bring it to life, like thinking about not just that trust element, but that control element, So, for years we wondered, why do people still use cash when they don't have to? It's about that control. It's about making sure you can prioritize your payments. So, the things that you have to pay go out first, not something that you wouldn't prioritize when you're on a limited income or an income that has to be stretched across so many things. Those are just some brilliant examples. And, Jonathan, it points to what you said about speed and, why, for example, as you said, if your car's broken down, you need the money in your account straight away so you can fix it, so you can go to work. So I think you've given some great examples that really brings that to life.
And I think
so. I'm just going to, sorry, go ahead, Jonathan.
Just going to add another interesting thing over the pandemic was we started conversations about this time last year with Andrew. By the time the pandemic had hit, we didn't have a single credit union on the platform with ClearBank yet, but it's been being able to deploy the services remotely during that time. We're now at a point we've got around 10 credit unions live in the last 4 or 5 months using the incuto ClearBank connection. So not only is it supporting the credit unions to support their members on a long-term basis remotely, but actually doing it in a time of stress. It wasn't just supporting them, it was actually launching the service. And we've seen the first 4 or 5 really use the platform in earnest. And I think the difference that it's made to them from the feedback they've given has been, phenomenal to the members. And it's been really good to hear and quite rewarding from our side to, hear the good news stories back from the credit unions themselves.
Yeah, I can imagine delivering those services when people absolutely need them is must be extremely satisfying. I'm just going to turn to a question that someone's posted in the chat for both of you. It says, the larger banks have often talked about trying to foster brand loyalty, trying to mimic the hipster vibe of banks like Monzo with its Coral card. Have you seen many building societies trying to push that pride in your community country aspect of being a customer? Have they tried shyer hipster marketing?
I haven't seen any shy hipsters. No shy hipsters marketing that I've seen, but I think it is very much fundamental aspects of people are generally pretty proud of where they're from, and sort of touching that point, being able to carry a card around in your wallet that says county, whatever the county is, whatever the town is, that building society, and that's the account I use, and I've had this since I was 14 and now I've used it forever. I think that's that is such a powerful message, and lots of people do. Yeah, the Monzo cards are like with the Coral card is pretty noticeable, and stands out in a crowd, and that's why they've done so well in terms of the popularity for them. But the other thing about building societies is that they don't compete, right? They're not looking to take each other's members from each other. So it's really a collective effort across each individual community to bring it to the wider community as a whole and provide the services to the wider population that they can.
Yeah, Andrew, I mean, do you think that these institutions are kind of trying to leverage that strong community feeling, or I don't know if this is a new term, but shyer hipster marketing? But I think we can definitely make it a thing after today.
Absolutely. I've never heard of shyer hipster marketing, but we'll make it. That's a good thing because I can now make something up. Look, one of the debit cards are a relatively new thing to community banking and credit unions specifically. And there's one point I want to address on this, actually, that Jonathan made a point earlier about being able to offer a current account. And actually, for most people in community banks, credit unions, and building societies, the idea of offering a current account is probably really scary. It completely and fundamentally changes the model that they know, which is about stability of saving, stability of income, and a liquidity model which allows them to lend over long term. So an element of this is not actually about saying it only works if it's a current account, but the attachment of an account number and sort code to an account is super important because it just speeds up the transaction, but it also makes it accessible externally. Someone can have their benefits paid in, someone can give that to a friend when they've been out for dinner or whatever, if we were ever allowed out again to go do that. And with the debit card, it's a kind of strange one because there are a lot of utility companies, for example, and we're working with one in Northumbria who have changed to a cash-only model. A non-cash model. So you can't pay cash to pay your bill. You have to use a card. And so the community bank has taken a role to say, well, if no one else will give you a card, we will. And a lot of the prepaid cards have a challenge where you get charged quite significant fees per transaction to be able to deliver that service. So if you're taking someone who is already financially excluded and is counting the pennies and then add in £1 or £2 on top of that transaction to withdraw money from an ATM, that's just an entirely unacceptable thing. It's morally wrong. And so the model of taking that and taking a debit card has to be a real product. It has to be a real card. And the reason I mention that is because that branding thing is really important. it's equally that it's not someone else's brand. Because the key to this, our entire platform, nobody will, if we've done our job right, no one will ever know or care who Incuto is. But there'll be a few CEOs of building societies and credit unions who care enough to notice, maybe Jonathan. But the end customer should never know anything about us, right? So the idea that we would overlay our brand on it or ClearBank's brand on it is just nonsense. So supporting the brand and allowing someone to define their own brand in their own community is super important, whether that's how they choose to use it with a Shire hipster model or whatever. But allowing that to happen where it's required or wanted is super important anyway. Sorry, there's a total divergence from the question, but.
No, and that was a great response. And I think your point around the customer need not know who you are, because it would probably just confuse them, right? Their loyalty is to the credit union or the community bank. So it's a humble approach, hoping that no one will ever know who you are, but it makes complete sense from a customer perspective. One other question and I'll direct this to you first, Jonathan, perhaps. It says, we spoke on the main stage earlier about the need to carefully balance technology with the human approach. Are there any times where you think digital solutions are not appropriate in driving financial inclusivity and wellness, and actually a human approach is needed? And I imagine, particularly given the financial crises, personal financial crises we can anticipate, given, the broader economic and health crisis, this is a really relevant question.
Yeah, absolutely. So I think digital solutions should always be available and should always be a possibility for people. But people also need, outside of lockdown times, the ability to go into a branch, talk to someone, understand what the terms of the mortgage mean, what the emergency loan will actually mean for them, understand how they can improve their financial situation overall, what changes need to be made. Doing that digitally or over the phone can't replace the benefit of going into a branch, talking to a real person who knows what they're talking about and is there to try and help you. The question earlier I think the first question was around how the banks have been closing their branches over a number of years, the high street banks. And by doing that, you understand why they're cutting costs there. They think that they're not needed. But at a time like this, I bet they'll be needed. And I bet people will be struggling once everything opens up a little bit more again. So people will be struggling to get into branch to talk to the people that they need to. So the building societies, the community banks, having that branch presence, having the experts there to talk and assist people is just going to be invaluable over the long term. And I think is more complementing the digital availability of services rather than replacing. It's much more a sort of, they supplement each other rather than replace each other.
Would you agree with that view, Andrew, in that branches are here to stay and it's about offering a complementary digital service to support that?
Absolutely, 100%. So two things on that. One is we as Incuto, we've signed up to the banking framework with the post office. So a member of a credit union can walk into a post office branch and withdraw or deposit funds over the counter like you could do if you had a high street bank account. And suddenly you've got nationwide reach, 11,500 branches on top of the potentially 1 or 2 branches that existed elsewhere. And that's really important. That's only possible, by the way, because of the virtual account numbers and sort codes, because that's the key identifier for someone in that interaction. Our model has always been about, there's 10 people in a queue. The 3 at the front didn't need to be there. They could have just gone home and done whatever it was they wanted, whenever they wanted. The next 3 people needed to be there. They needed help and support, and they were vulnerable. And the 4 people at the back left because there were 6 people in front of them in the queue. So this has always been about get rid of the 3 at the front, attract them in the first place, give them what they need, and don't make them have to come to a branch, because why would you want to do that? Help the 3 in the middle, and they are the reason why everybody's there, right? Help those people, give them the time they need, the space they need, and get them over the line in whatever it is that they need help with, and retain the 4 at the back, win their business, because they could have been people who weren't even a member yet wanting to join. So our model has always been about the 70%, the 3 at the front, the 4 at the back, and spend the time looking after the 3 in the middle.
I really like that picture you're painting with that of the customers online. Jonathan, did you want to come back in with something on that?
No, I think Andrew.
Oh, sorry. I thought you looked like you were about
I was
to
just
say.
agreeing with his wise words. That's all.
They are wise words. I wonder, we're just about running out of time, but I wanted to put one final question to both of you for some final thoughts. If in 10 years' time we were to look back at 2020, and it probably, to be honest, won't be a year that we'll all be celebrating in memory, and all the changes that have occurred in banking as the result of the pandemic, what do you think will be the biggest change of all? Maybe we can start with you, Andrew.
Slightly controversially, I don't think anything in 2020 has happened because of the pandemic. I think it was all happening anyway. It just sped up because of the pandemic. We didn't, we're FCA regulated. We've got a relationship with Jonathan and ClearBank. They didn't happen as it's not like changing the factory line to create ventilators and PPE. This was a long-term project that's been going well before this. And credit unions have been around since the 60s. Building societies for hundreds of years. This is not something that's new. I think what we'll probably look back on is seeing this as a time where people shift their behaviors away from traditional banking and start to look at why their impact on their own community could be heightened by giving away. And I think the biggest trigger to that is roll forward 6 months and we might have negative interest rates. Credit unions and community banks and building societies pay dividends, not interest, on many accounts. And that's going to be a massive swing. Now, that might not be good news for everybody because they might not want all the money, but I think that's probably a trigger point for when people will start to see community banking as a key model. I think over the next 10 years, that's going to become way more prevalent.
That's a fascinating point, Andrew. And moving on to you, Jonathan, last word with you. Do you see any permanent changes coming as a result of this crisis?
I think the biggest permanent change will be the remote working and the remote support service you can provide. Again, it's not in place of the branch, but we know some credit unions that were completely branch support, very little support on the phone or online, and they had to adapt to that. And I think there's a line that I've heard recently that has been 10 years change happened in 10 months this year, which is quite apt. So it is very much a fast forward to the point that we were probably going to get to, but it's that remote working, remote support for customers, and then remote deployment of services. I think has been the biggest change from 2019 to 2020, and that's what we'll continue to see over the next decade or so.
Yeah,
I think that's a great note to finish on, accelerated change. I want to thank both of you for a fantastic conversation today and for being patient with me as a late step in moderator. So thanks to both of you. I know that you're both obviously on the platform with us today, so people can contact ClearBooth at your booth, or you can reach out to Andrew and Jonathan through the People's tab as well and send them a message. So thank you again to both of you.
Great, thank you.
You.